Hello everyone, welcome back to Ancient Classes. This is our fourth class related to Kerala Accounts Code. In this class, we are going to discuss various previous year's question papers. I assure you that if you go through this class at least 5 or 6 times, you would be definitely able to pass the exam. Because at least 40 questions will be asked from this portion. Okay, so let's start. The Kerala Accounts Code is issued in how many volumes? It is issued in 3 volumes. General Principles and Methods of Accounts, Treasury Accounts and Departmental Accounts. Next point. Article 150 of the Constitution of India sets out the main direction to CAG of India with the approval of the President. So, which article sets out the main direction to CAG? Article 150. Next point. AG is the head of an office of accountant subordinate to CAG of India. Next, State Account General means the AG who keeps the account of a state. Who is a non-civil officer? A non-civil officer is an account officer of Defence, Railway and Post and Telegraphic Department. Next, Civil Account Officer is subordinate to CAG other than AG, Post and Telegraphic and office subordinate to him. The Audit and Account Order was issued in the year 1936. What do you mean by a bank? The bank means RBI, any branch of SBI acting as the agent of RBI under the provision of the RBI Act 1934. Any branch of a subsidiary bank as defined in Section 2 of SBI Act 1959. Next point. Which article gives CAG the power related to various functions? The article is Article 49. And one more article is there, that is Article 150 of Constitution of India. Dash has to submit to Governor a general financial statement incorporating a summary of accounts for the last preceding year and particular of the balance and outstanding liabilities and containing such other informations as to their financial position. Who has to submit? Accountant General. Next, the initial and subsidiary account rules relieves the CAG from the responsibility of keeping accounts of a specified class. Who all comes under this specified class? Which all classes? That means initial and subsidiary accounts rules relieve CAG from certain responsibility of keeping accounts. Okay, and those things are initial accounts kept in treasuries, initial and subsidiary accounts that may be required to be kept in other offices or department of the Federation. Then stores, stock of any office or department, trading, manufacturing, P&L accounts, balance sheet and any other subsidiary accounts in any department of the Federation. So, initial and subsidiary rules relieves the CAG from keeping accounts related to specified classes. Next point, Article 150 of the Constitution prescribes that CAG is empowered with the approval of the President to prescribe the form of initial accounts from which accounts rendered to the Indian Audit and Accounts Department are compiled. So, the form is prescribed by who? Who prescribes the form? It is prescribed by CAG with the approval of the President. Next one, the form of accounts including the appropriation account relating to defense, railway and any other department or services whose accounts are not kept by CAG are determined by departmental accounting authorities. Okay. Next one, appropriation account. The institution relating the preparation and submission of such accounts by AG are included in the audit manual issued by CAG. The object of appropriation account is to relate the expenditure brought into account during a financial year. So what is the objective of an appropriation account? It is to relate the expenditure brought into account during a financial year. Next one, consolidated fund is one into which revenue received by the central state government, loans raised by that government by the issue of treasury bill, loans, ways and means, advances, and money received by that government in repayment of loans are credited, from which expenditure of that government, when so authorized by the appropriate legislatures, are met. Next, public account is one into which public money received by or on behalf of the central state government are credited and from which disbursements are made. So what do you mean by public account? It is an account into which public money received on behalf of central state government are credited and from which disbursements are made. Next, the contingency fund will be at the disposal of the President or the Governor of the state to enable advances to be made by him for meeting unforeseen expenditure pending authorization of such expenditure by Parliament or the state legislature under appropriations made by the law. So, contingency fund is actually used to meet unforeseen expenditure. Next, the transactions of Railway, Post, Telegraph and Defence Department form part of Consolidated Fund, Contingency Fund and Public Accounts of India and are taken against Railway Fund, Post and Telegraphic Account and Defence Account. Next, the receipt and payment of money on behalf of a state outside its jurisdiction are ordinarily arranged through AG of the state in which the transaction takes place. This is very important. The receipt and payment of money on behalf of a state outside its jurisdiction are ordinarily arranged through AG of the state in which the transaction takes place. Next, Article 9. According to Article 9, Government of Jammu Kashmir has not so far entered into agreement with RBI for the conduct of their general banking business by the bank. This is very important. This question has been asked several times. So which article shows that Jammu and Kashmir has not entered into agreement till now? Article 9. Next, all RBI keeps two separate accounts of cash transaction, one for central government and other for state government. At the close of each month, the balance of the two accounts are transferred to the central accounts section of RBI Nagpur. So this central account section of RBI is the clearing house. Next, transactions of railway, post, telegraphic, Defense services are kept in separate accounts. Next, SBI transacting government business classifies the daily receipts and disbursements on behalf of government into two groups, that is central and state. Separate statements are forwarded by each branch daily with supporting vouchers to the local treasury officer or to AG. The total of such transactions are reported at the close of each day to the Central Account section of RBI through the Central Account Office of SBI at Calcutta. Next, the clearing house for the adjustment of transaction for different government, that is Central Account section of RBI Nagpur, acts as a clearing house for the adjustment of transaction between different government. At the close of accounts of each month, a statement of closing balance of each government on the book of bank is taken into account and all cash transactions are entered, and the adjusting transaction is forwarded by the Central Account section to the AG concerned. Next, cash balance held in the treasuries of central government form part of Consolidated Fund, Contingency Fund and Public Accounts of India. Transactions on behalf of state government arising in these treasuries are taken against central balances in the first instance and are subsequently adjusted by the AG against the bank of the state concerned through Central Account section of RBI. The detailed account of the receipts released in the railway, defense, post telegraphic, public work, forest, etc. are kept by the departmental officer concerned. Departmental officers of post, telegraphic, railway departments submit account of their transaction to the respective post and telegraphic and railway accounts officer. The accounts of defense services are compiled by Controller General of Defense Account on the basis of the particulars of receipts and disbursement furnished by various defense account officers. Next, book transactions arising in the central section of the accounts of a civil account officer, which are adjustable in the accounts of the state kept by another account officer, are passed on through exchange account to adjust the transactions against the bank balances of the states. Next, settlement account. Transactions initially taken against the balance of a state, later adjusted against the balance of another state, are passed on to Accountant General of the latter state through settlement account. Next, account current. Account current is used to include different classes of accounts as well as accounts with the government of other countries. Annual accounts of each state government and the appropriate account are submitted to the government of the representative states in pursuance of the provisions of the para 11.4 of Audit and Accounts Order 1936. Next, annual account is also known as financial account. Annual account is also known as financial account. It is prepared by Accountant General in a form prescribed by CAG with the approval of the President and submitted to Controller and Auditor General for approval and transmission to the governor of the state concerned. Next, finance account of central government is to be submitted by the CAG to central government are prepared by Accountant General, Central Revenue. Next, the appropriation account of the Central Audit Department and of Post and Telegraphic Department are prepared by the Accountant General, Central Revenue, and the Accountant General, Post and Telegraphic, and submitted by the CAG to the President. Next, the appropriation account of Railway and of Defence Services are prepared by the accounting authorities under the direction of the Ministry of Railway and Financial Advisor, Ministry of Finance, respectively. Next, CAG submit to the President annually a general financial statement incorporating the survey of the accounts of central government and all states and all state for the previous financial year. The general financial statement is also called Combined Finance and Revenue Account of State and Central Government of India. What do you mean by a pro forma account? Undertakings of a commercial or a quasi-commercial character, example, an industrial factory or a store, which maintains commercial system of accounts. Their accounts are kept in a pro forma form outside the general account of government. So what do you mean by pro forma account? Accounts of all undertakings of a commercial or quasi-commercial character are kept in a separate account outside the general account of the government. Such accounts are known as pro forma accounts. Pro forma account is maintained by the departmental authorities themselves in such form as may be agreed upon between the CAG and the government concerned. Pro forma account relating to irrigation, navigation, embankment and drainage project and the government residential buildings are required to be prepared by civil accountant officer. The transactions of the famine relief fund is prepared in pro forma account. Pro forma account is for manufacturing, trading and P&L accounts. It is maintained for commercial departments like the first one, the PWD Engineering Workshop Trivandrum, the textbook department, the irrigation schemes and projects for which revenue and accounts are kept. Next, the State Water Transport Department, Model Coir Factory Bepur, Bleaching and Calendaring Plant, Papanangod, etc. Journal and Ledger. The accounts of government are based on single entry system. So accounts of government is based on single entry system. Double entry system is applied to maintenance of journal and ledger. The main purpose of a journal and ledger is to bring out by a scientific method the balances of account in regard to which government acts as a banker, remitter, borrower or lender. Next, the annual general finance statement, that is the combined finance and revenue account of the central government and state government of India, which the CAG prepares, shall record the transactions of the central, state and union government for the same period. Next, the transactions in government account should represent the actual cash receipts and disbursement during a financial year. The accounts of government kept in India shall be maintained in Indian currencies. So this is an important question. The accounts of government kept in India should be maintained in Indian currency. Next, government accounts are kept in three forms: consolidated fund, contingency fund, and public account. Consolidated fund can be divided into revenue and capital. Revenue can be again divided into receipts and expenditure. Capital includes capital, public debt and loans. It is also divided into receipt and expenditure. Capital expenditure are usually from borrowed funds with the object of increasing concrete asset of a material and permanent character or decrease recurring liability. So what is the main aim of capital expenditure? It is to increase the concrete asset of a material and permanent character and to decrease recurring liabilities. Public debt loans and advances comprises loans raised by the government like internal debt and their repayment, external debt of the central government, and loans and advances made and their recoveries. Article 267 deals with contingency fund. Each division of Article 24 can be divided into a five-tier system. Each division of Article 24 can be divided into sectors, major head, minor head, subhead, detailed head. This five-tier system comes under Article 24. So what do you mean by five-tier system? Five-tier system consists of sectors, major head, minor head, subhead and detailed head. So let's see each in detail. First one is sector. Sector means the general services, and it is the social and community services. Sectors are sometimes divided into a further smaller sector that is known as subsector. The second part is major head. The second tier is the major head. Major head consists of three different Arabic. The major head consists of 3-digit Arabic number code. Out of the three digits of major head, first digit indicates a section. That is revenue, receipts, revenue, expenditure, capital, receipts, capital, expenditure, public debt, loans, advances, etc. Next two digit indicates the functional major head. The receipt major head are revenue account and are assigned the block of consecutive serial number 0020 to 1999. Expenditure major head on revenue account is from 2011 to 3999. Capital receipt major head has been assigned code number 4000. Capital expenditure 4011 to 5999. Major head under public debt 6001 to 6010. Loans and advances, interstate settlement and transfer to contingency fund is from 6011 to 7999. Part 2 contingency fund is assigned the code 8000. Public fund 8001 to 8999. Code numbers relating to the major head in respect of the same function under the four sectors differ from one another by 200. So this is the 5-tier system or 5-tier classification structure. The major head corresponds to the functions of the government like agriculture, defense, etc. Minor head identifies the programs undertaken to achieve the object of the function. A program consists of a number of schemes and activities that is known as the subhead. Detail head constitutes the object classifications like salary, office expenses, grant in aid, etc. Introduction of a new major head or minor head or abolition or change needs the approval of CAG and the President. The expenditure which under the provision of Constitution is subject to vote of the legislature shall be shown in the account separately from the expenditure which is charged as the Consolidated Fund of India or a state or union territory. Next, expenditure incurred by the PWD on the construction of a hospital shall be debited under major head 2210 medical and public health and not under major head public work. Now we will see what do you mean by. Now we will see what is capital expenditure and what is revenue expenditure. As I already told, capital expenditure, the main aim is to increase concrete asset of a material and permanent nature or to decrease liabilities. It is not related to temporary assets. Assets produced should belong to the authority incurring the expenditure. Granting aid for creating assets cannot be considered under it. Capital should bear all charges for first construction and equipments of a project and its immediate maintenance and its further addition and improvement. And what is revenue expenditure? All expenditure on the working and upkeeping of the project comes under this revenue expenditure. Next we will see what is pay and allowances. Pay and allowances doesn't include TA. The transit pay and allowance of a government servant proceeding to join an office, whether on the first appointment or a transfer, be debited to the office to which he is proceeding. Next, travel pay and allowances of office of a defense or railway lent to civil department are debitable to the borrowing department. The transit pay and allowances, whether it is forward or return journey of government servants transferred to or from mission and offices abroad, will be borne by the ministry which plans the transfer. Next, when an officer is transferred to another department while on long leave, the transfer does not take effect until he joins his new appointment. Another one important question is, washing allowance paid to class 2 government servant is classified under which head? It is classified under salaries. Washing allowance paid to class 4, washing allowances paid to class 4 government servant is classified under salaries. Next, the travelling expenses of a government servant be debited to the same head of pay except when government consider it as a special service or when the travel is connected with an outside body or fund or a special order of the government authorizes a deviation from the general rule. The travelling allowance of an officer paid from a local fund when travelling is in connection with execution of a government duty be paid and charged to the general revenue. The travelling allowance paid from general revenue when travelling on duty connected with the local fund will be charged to local fund. The TA paid to officers appointed as members of committees and commissions by Government of India are governed by the state rules, but borne by the central government. A government officer required to attend meeting in committees with the affairs of corporation, board, council, undertaking, etc., that's not coming under departmental, should claim TA and DA according to the TA rules of the government who appoints him. Whenever there is no receipt head, the TA should be charged to. Whenever there is no receipt head, the TA should be charged to miscellaneous head. So what's the meaning of that? Whenever there is no receipt head, when we don't know the receipt head, TA should be charged to miscellaneous head. Next, expenditure on the construction of government non-residential building, administration, officers will be accounted under 2059 Public Works or 4059 Capital Outlay on Public Work. Expenditure on construction for functional purpose like colleges, hospitals, school should be accounted under 2202. General education, that is 4202 Capital Outlay on education, sports, arts and culture. So 4202 is the code assigned to general education. Capital outlay on education, sports, art, culture, etc. 2210 for medical and public health. 4210 capital outlay on medical and public health. Expenditure on government residential building will be accounted under 2216 or 4216. Expenditure on staff quarters for doctors, nurses, etc. It is accounted under medical and not housing. Next, rent recovered on account of building in charge of departments other than PWD should be treated as department receipt and not PWD receipt. Contributions made by the central and the state government to district board municipalities or vice versa should be debited as expenditure or shown as receipt, as the case may be, under the head of account and must closely connected with the objective for which the contributions are made. Advances of pay and travelling allowances on transfer should be debited to the final head of account and not to the civil advances. Next, the recovery of pay and transfer advances on transfer will, irrespective of the year of recovery, to be shown as expenditure. Refund of assets remaining unspent out of the advance should be dealt with as cash recoveries and adjusted in the accounts in accordance with Article 22. Next, item of receipt and payment which cannot once be taken to a final head of receipts or charge owing to the lack of information as to the nature may be temporarily kept under the head suspense account. So, items of receipts or payment which cannot at once be taken to final head because of the lack of information should be kept temporarily under the head suspense account. So, items of receipts and payments which cannot at once be taken to final head of receipt or charge owing to lack of information are kept in suspense account 8658 in the sector suspense and miscellaneous. Charges which are disallowed from the inward settlement account which are not susceptible of final adjustments against some other head is also kept under such account. Next, net gain or loss by exchange of government transactions taking place in embassies, missions abroad shall be uniformly adjusted in the books of central government under the head 0075 or 2075 miscellaneous general service gain loss by exchange. Next, the municipal rates taxes on non-residential building utilized for functional purposes like schools, colleges, etc. if paid by the relevant department then would be adjusted in accounts under the head rent, rate and taxes, and if whole or part of the tax is paid by PWD then it is debited to 2059 public works maintenance and repairs. Next, if the whole or a portion of the tax which by local rule or custom are ordinarily leviable on the tenant is paid by a department of the government, such payments are treated as part of contingent expenditure of the department. Next, taxes both on residential and non-residential building owned or occupied by Defence Department should be debited to the Defence Service estimates. Next, Article 113 of Kerala Financial Code deals with the detailed rules governing the payment and municipal and other local taxes or building occupied by Department of Government or government servants. All extra expenditure connected with the Survey of India unit for field operation should be borne by the defence estimates. Next, the receipts from tolls should be considered to be minor head road under the major head 1054 roads and bridges. Next, the detailed rules by which allocation or expenditure between capital and revenue in commercial department and undertakings should be determined is made by government after consultation with CAG. Next, correction in accounts can be made if an item which belongs to revenue or expenditure head is wrongly classified under another revenue. The amount written off have been examined by the internal audit section and the accountant general is satisfied that the items have been outstanding for over 5 years and its worth written off and the write-off is unavoidable. AG is satisfied that the outstanding is due to bookkeeping error. Next, the the account or the amount written off by the AG should be reported to the CAG of India annually by 10th November. In case of PF suspense, a quarterly report on items written off by the group officer under the powers delegated to him should be submitted to the AG for review. The AG should report to the CAG on the write-off or suspense half yearly on 10th May and 10th November. Okay, next moving on to the Annexure A. List of sections, sectors, subsectors under the main division of accounts. First one is consolidated fund. It can be divided into revenue and capital, public account and loans. Under revenue, there are two divisions, receipts and expenditure. Under receipts comes tax revenue, non-tax revenue and grant in aid. Under tax revenue, there are income, expenditure, property, capital transaction, commodity and services. Under non-tax revenue, currency, coins, mint, receipts, dividends, profits, other non-tax revenues. And then grant in aid. Under the expenditure side comes general services like organs of the state, fiscal, interest payment, servicing of debt, administrative services, pension, defense, etc. Then comes the social and community services, then economic services like agriculture, water, power, transport, minerals, communication, railway, post, telegraphic, etc. Then grant in aid and contribution. Then coming on to capital, public debt and loans, it can be divided into receipt and expenditure. Under expenditure again, there are general services, social and community services, economic services, grant in aid and contribution. And under capital, under public debt, loans and advances, there comes public debt, loans and advances, interstate settlement, transfer to contingency fund, etc. Next is contingency fund that we have already discussed. Then third one is public account. Under that, there are so many divisions like small savings, PF, reserve fund bearing interest, reserve fund not bearing interest, deposit and advances bearing interest and not. Then suspense and miscellaneous like coinage account, suspense account with government of foreign countries, etc. Then remittances, money orders, adjustment between office rendering accounts to the same account in general, inter-government adjustment account, exchange account, etc. Then cash balances. Next, salaries include pay allowances, expenses on LTC, etc. Next, wage includes wage of labor and of state at present paid out of contingencies. Leave travel allowance is not traveling allowance, but it comes under salary. Next, purchase and maintenance of staff, cars and other vehicles for office use comes under office expenses. Next, payment for professional and special service include legal services, consultation, fees, remuneration to examiners, invigilators, then the remuneration paid to in All India Radio and other professional services. Then publications will include expenditure of printing of office codes, then maintenance of priced and non-priced articles, but it will exclude all expenditure on printing and printing of publicity materials. Next one is inter-account transfer. It will include transfer to and from reserve fund.